Informatics College. This is Module 2 or topic number 2 about accounting equation. Why is accounting equation very important in the business? Any one of you who has an idea why accounting is very important to the business? Yes, because you are going to understand and identify your balance sheet. You can see your income statement, and you can also see your cash flow statement. Okay, so the importance of accounting equation, or why is accounting important to any form of business, whether micro business, small, medium enterprise, or corporation. You understand your balance sheet, you can identify your income statement, and you can identify your cash flow statement. So let's go to accounting equation. Accounting equation is asset is equal to liabilities plus equity. Okay? In when you are talking of single proprietorship type of business or partnership, you call equity as owner's equity. But if your type of business is a corporation, you call equity as shareholders equity. Okay? Now, single proprietorship, if your business is single proprietorship, meaning to say there is a single person who owns the business, and the registration of your business is to Department of Trade and Industry. However, if your business is partnership or corporation, you register your business not to DTI because that is for single proprietorship. You go to SEC, Securities Exchange Commission. Okay? So that's clear. Okay? So, let's go now to accounting equation. The equation is this one. That is the equation. Okay? Now, we will study one by one what are these. Okay? All right. Let's go to asset first. So, asset is what you own. What the business or what the entrepreneur owns. It could be cash. It could be inventory, finished goods, no, inside the warehouse, finished goods warehouse. Accounts receivables, prepaid expenses, and machineries and equipment. It could be also land, buildings. All right. So those are called assets. It could be it could be um, it could be what you called fixed asset or movable assets. Okay. So in this asset side, this is what the businessman or entrepreneur owns. These liabilities examples are accounts payable, your credit, notes payable, cash payables, no? For example, you uh, you have to buy a office materials. Therefore, you need notes or cash to pay it. So that is notes payable. And deferred revenues, meaning to say, these are called deferred revenues. By the word alone, deferred, it has to be collected, no? Deferred revenues. Okay. All right. So we know now assets. We know now liabilities. Okay. And therefore, we have to understand that uh, these words, assets, liabilities, and equity, these are terminologies used in accounting. And again, it has to do with the business because you understand your balance sheet, income statement, and cash flow statement. Okay? Again, assets are anything valuable that your company owns, whether it's equipment, land, buildings, or intellectual property. When you look at your assets, okay, you're trying to answer a simple question. How much do I have? If it has value and you own it, it's called an asset. And some common assets include accounts receivable. Again, these are any payment that your clients or customers owe you. Cash, that is the money you have in your business bank account. Inventory, any goods you have in stock that you intend to sell. Property and equipment, any building or tools that you need to operate your business. So there are two categories of asset. Current assets, these are example are inventory, no? These are cash or anything that can be converted into cash within a year, huh? Okay? Fixed asset, things like land, trademarks, and the value of your brand. Okay? So we are done with assets. Let's go now to liabilities. Liabilities are any debts that your company has, whether it's bank loans, mortgages, unpaid bills, or IOU, no? Or any other sum of money that you owe someone else. It's called liabilities. When you look at your accounting spreadsheets and you look at your liabilities, you are asking the question, how much do I owe? Okay? And how much do I owe? How much do I have? Okay? If you promise to pay someone in the future and haven't paid them yet, that's a liability. Some popular examples of liability: accounts payable, payment you owe your suppliers, bank loans, the principal you owe investors, salaries and wages payable, what you agreed to pay your employees in the future, no? Again, there are two types of liabilities. We have also current, same with the assets. Current liabilities, debts that you owe within the next 12 months, no? Short term. And non-current assets are considered long-term debt that ranges beyond 12 months. So combine them, you get your total liabilities. You have current plus non-current, you have your total liabilities. Okay? Now let's go to equity. Again, I would like to reiterate that if it's proprietorship and partnership, it's called owner's equity. If it's a corporation, it's called shareholders equity. Okay? The question here is how much is left over? How much is left over? How much is left to the business? Okay? So, that's what you're looking at your equity. It tells you how much value is left over once you totaled up everything valuable that you have and subtracted everything you owe to your creditors. For small business owner, equity is the net worth of your business. No? Put it another way, when you take all of your assets and subtract all of your liabilities, you get equity. Okay? So, the type of equity that most people are familiar with is stock. This is in corporation. Ano? Some corporation have shares of stock. How much a company someone owns in the form of shares of stock. No? Other examples are stock. Other example is preferred preferred stock. No? Um, the entities you to some extra perks. People who hold preferred stock usually have first dividends on profits. Okay, capital. It's another example of equity. Capital. Okay, capital is whatever is left over from the money that the company's founders initially invested in the business. And there is also retained earnings. So, uh, retained retained earnings, any profit that owners decided to keep in the company for future spending rather than pay out to themselves. Okay? So, the accounting equation in action, in order for the accounting equation to stay in balance, every increase in assets has to be matched by an increase in liabilities or equity or both. Okay? If the accounting equation is out of balance, that's a sign that you have made a mistake in your accounting and that you lost track of some of your asset, liabilities, or equity. Okay? Alright. So, um, if, for example, we want to compute asset, so we stick on to the accounting equation. Okay? So, if we want to compute for asset, we use the formula liabilities plus equity. If we want to compute for liabilities, asset minus equity. Okay? Minus. Ayun. If we want to compute for equity, asset minus liabilities. If we want to know your total asset, you have to add your liabilities plus equity, and that is asset. Again, what are examples? Cash, inventory, account receivables, prepaid expenses, equipment, land, building. Okay? Liabilities at what you owe to the bank. That is maybe through loan, or you are paying a monthly amortization because you took a motorcycle, or you are paying probably a rental expenses, something like that. Okay? So here, you can see that Equity is the owner's contribution. Positive. Owner's withdrawal is negative. Revenues is positive. Expenses is negative. So, it could be sales, interest, rental income, or service fees. That's the revenues. If you talk about expenses, these are salaries, cost of goods sold, rent, depreciation, advertising, professional fees, utilities, office supplies. So, um, if you, this is revenue and expenses. Now, let's go to a much deeper understanding of what is owner's contribution, okay, or what we call profit of the business. Okay. So, when we say profit, it is equal to revenues minus expenses. Again, in expenses, there are two types. One is fixed expenses, and the other one is starts with the letter V, variable expenses. So, what is the difference between a fixed expense and a variable expense? Fixed expense, even though you increase the number of your volume or output, let's say from 1,000, you increase it by 1,200, still you have fixed expenses because it is not directly related to the operation or cost of goods sold. However, for variable expenses, even if you increase your volume of production, you also increase the variable expense. So they are directly proportional. If you decrease your volume, your variable expenses also decreases. So examples of fixed expenses, rentals, no? Uh, Rentals, or whether that is electricity, water, and then the salary of your employees, okay, insurances, those are types of fixed expenses. So, if you want to compute the profit of the company, you have to deduct first, you have a fixed expenses and identify what are your fixed and variable expenses. You add those, so you have now your total expenses. Okay, there you go. So you compute your revenues or sales for the month, okay, and you subtract your total expenses, and what is left is profit. Now, profit could be gain or it could be loss. If profit, okay, if revenues is equal to expenses, it is called what? Break-even point. No profit or gain and no loss. It is break-even. When it happens when revenue is equal to expense. But no entrepreneur wants to operate the business always at break-even point. So you have to increase your revenues coming from your customers and control your expenses so that your expenses will not go higher. Again, what are expenses? It could be fixed and it could be variable expenses. So, this is very important. I will give a sheet work and then an assignment, and then you have to do activity or lesson number 2 in Brightspace so that you can understand this accounting equation, which is asset is equal to liabilities plus owner's equity. And to compute for profit, you have to subtract expenses from revenues. So therefore, if revenues is equal to expenses, it is called a break-even point. And expenses has two types. It could be fixed and it could be variable expenses. So, this lesson is very simple. That's why I'm using a video tutorial in order for you to understand. Okay? Alright. So, please try to submit on time. Okay? The assignment related to accounting equation and about profit, revenues, and expenses. So I wish you all safe and secured throughout the day.